Absolutely just beautiful chaos today, beautiful chaos. Fear, we had, I can't believe I'm going to start by mentioning the VIX. The VIX up. We had gold up. I'll talk about gold. We had gold up, silver not up that much. The miners down. That suggests pure fear. So when I say gold and VIX together, I'm talking about fear-driven gold and VIX up. The VIX I'm mentioning because it was up like 18%. That's not normal. We had yields down. That's because bonds were being bought out of fear. Otherwise, we had just everything down. It was just VIX, bonds, and gold up. Everything else down. The dollar down, which was interesting. You'd expect that to be up on fear, but whatever. It already had a crazy run at resistance. We'll take a look at that also. It all made sense. Otherwise, just everything down. It was kind of turmoil. It was reminiscent of those big down days, even though the market wasn't down too much, but there were some meaningful moves down. And I think it's only the Nasdaq for once that wasn't down below a critical support. We're going to look into it. We're going to look into everything right away. But for me, just tremendous stuff because it's what I've been saying. I mean, yeah, it may have been delayed by 1 or 2 days, or there may have been a small move up before, but for me, it just makes sense. It's long overdue. We're not done. Look at my last videos. It's basically what I'm saying. I'll summarize it like this. We're going to go to new lows. I don't want to get caught up, but in the moment, we're having a big down day, and then I just say we're going to new lows. But I'm saying that when the market's going up and it's still looking bullish, I really think we're going to new lows. I think the yields, well, I was going to say the yields are going to go to new highs, but they've already done that. I'm going to stick with what I said. I think the dollar will go up more. I don't think it will go to new highs, though, because I think there's fundamental structural issues. The BRICS nations are coming together, right? With what happened, the confiscation of Russian assets, all of this aggressive foreign policy pushing people away, and they're just essentially going to be making their own settlement systems outside of the dollar. Well, I'm getting a sidetracked here, but very exciting, lots of things. And also, by the way, the banks today, that's what drove everything down for once. Small banks in particular. I read quite a long thread on that, and it makes sense to me. The small banks, and it's just domino effects. It's interest rates going up, cracks in the system, black swans just all over the place. And it wasn't even Credit Suisse, but that one's going down. I mean, those days are numbered. All right, let me try and get through this in a chronological manner. Let me start off with the S&P. Sorry about that mini rant there. S&P, look at this. Move down. We've closed below this support zone. Clearly, we're going to go down here. That's not asking much. And then we're going to go down there. Not in one go. Nothing goes down in one go. But to me, ugly close, near low of day, below support. Very simple. We're going to go lower. Nasdaq. This was actually a little stronger. We were even able to test and tag this. Now, I didn't get to do a video yesterday, but it doesn't change much. The Nasdaq did not close below support, but it doesn't matter. All the others did. So, and usually Nasdaq leads the way down, and I think it will eventually. Once we go down here, the speculative assets will run down. By the way, Bitcoin got slaughtered just like I said it would. So Nasdaq down. Let's look at the down, but again, not below that critical support, but it doesn't matter because the Dow Jones, the strongest defensive market of them all, the one that moved up so securely, during this period here, late 2022, below support, clearly going down here. Similar sort of move down as the S&P, as in the amount of percentage move it's got lower. Look at the S&P, how much more of a move down? 1% and a bit. Dow Jones, maybe a bit more. 1.5, same thing, all done in one day. What day are we tomorrow? Friday. It could happen because this kind of a move, this isn't the sort of we're gonna bounce back and maybe we go up a little bit. Who knows? Maybe we tag this price support, acting as resistance. I don't even think it'll do that, and we'll close down again, making a very ugly weekly candle. That's my projection. And if I'm wrong, doesn't matter. We're gonna get there Monday and Tuesday anyway. Russell. The worst. I said Russell was the weakest down here. Look at this. It just basically hit the next level. It's there already. It's the first one. Look at this target. I didn't even think I'd have to draw it. Not only is it this support here, you can see this candle and this candle. which makes sense. Plus, it coincides with the ascending. Yes, I'm missing this candle here, but look at the others. 1, 2, 3, 4. That's why I count those 4 rather than this one. So, and it doesn't matter. It's an area, a general area. So tomorrow we'll tag that, and again, the Russell, we closed at low of day completely there. Not like the others that had a slightly, it's sort of just off its absolute lows. Look at the others there, but the Russell is just the weakest one in the house. And that makes sense on the way down. The small caps that generally lead on the way up, generally, they lead on the way down because they're the weakest ones. They're the ones most prone to higher rates. A bit like those bank stocks that went down. I might have to look at the bank stocks today, actually. The XLF ETF in particular. So, I mean, to me, it makes sense, not only technically, fundamentally, the moves today, the reason why the Russell's going down, the Dow, okay, I wouldn't expect that one to be one of the weakest ones, but technically it was. So, I mean, to summarize, the markets look very bad. Technically, fundamentally, they're horrible. They've been horrible for years. They're very horrible now that rates are going up. I mean, it's just a bubble looking for all the pins it can find. But here we're looking, okay. No, I was going to say you could have a small bounce. I don't even think I have a small bounce. Really, it's bad. The VIX, for once, starting to act like it should. Look at this move up. Beautiful. I haven't actually repositioned the trend line of the VIX because it hasn't really acted in a responsible manner in some time. I guess you could say, yes, we have a little bit of resistance here at 23, 24, but the way the VIX is acting, it could squeeze right through that. And to be honest, get finally to 26. I've been mentioning 26 for some time. I think just a few days ago, I wanted to delete the VIX because it was just pathetic. But, when there's real fear, surprise, shock, and sort of black swans rearing their ugly head, yeah, I think there's a lot of short covering, and you could get the VIX just doing one of these crazy moves. Look at this, one of these, pick one of those crazy candles. We're due for one of those. And it usually starts off with one big one like this, and it could easily have another one follow through. And who knows, we could slice right through 26. And I mean, I don't think we'll do it, but if we were to have a real crazy black swan event come up, you can expect it to basically test 30, psychological number. Also, by the time we do that, it'll probably start acting as descending resistance. So, yeah, keep your eye on the VIX. Although 20% sounds like a lot, it's not when you start really getting going. So, okay, so market's down, gonna go lower. You could have a small bounce, but I still think by the close of tomorrow, you're actually lower than you are today. And most importantly, the Russell, the Dow, the S&P closed below their, that support line that we've had for some time. I mean, this is several weeks. When was the last time we were below this area? The beginning of this year. So, yeah, doesn't look good, but I absolutely love it. Let's look at yields. For once, yields were down. Normally, you associate yields going up with the market going down, but in this case, it wasn't really a trade on interest rates. It was more, oh my God, things are coming apart. I'm scared. Let me buy bonds. It was just one of those. So I wouldn't look into the move in yields like, oh, the Fed's not going to raise. I don't think it's related to Federal Reserve interest rates, dot plots, or anything like that. It's just pure fear trades, basically. It's just a reaction that traders took. They said, okay, get me out. Get me in bonds rather than the dollar, actually, even though bonds usually push up the dollar. It's a bit weird, actually, that I think that the dollar wasn't green, but again, it had a crazy day yesterday. So yeah, let's just look at yields, just came down. You can see how much fear there was just from that. It made sense, we breached right through 5%, and now we're just retracing. I mean, obviously, I think yields are going to go back up again. But then again, it depends. If this black swan really develops, you could have a bit more of a move down, but still we'll go back up and test new highs, because the only thing that can prevent a move to new highs is the suggestion that the Fed is now not going to move as aggressively on interest rates. And the only reason they would do that is if there's a panic and people think that, oh, the Fed's going to, not not raise interest rates as much, or maybe even cut, which I don't think they'll do. They may not even cut interest rates for the whole year. But the market sometimes just says, oh, there's no way that they'll raise interest rates because the system's coming apart. And if banks start to fail, that's the system coming apart, and they deserve to fail, and they deserve to just fail completely. Don't bail out those little zombies. 5-year down, 10-year down, all just follow the same trajectory, move down, just bonds being bought. I'm not going to look at the European ones because they did not experience the fear that the US markets really experienced during the latter part of the evening. So maybe they'll drop a bit more. But again, I think this is just fear related. It's not really interest rate driven. So, but still interesting, markets going down despite yields going down. But of course, it's fear related. Let's look at the dollar. That too came down like yields. Not that much, again, I would have expected maybe the dollar to be unchanged or maybe slightly green on a day like today, or even up a significant amount. That could also be explained away, people just buying the dollars, selling everything and just holding dollars. But it just retraced a bit. I'm not going to read too much into that. I still think that this is totally on its way up. And I didn't get to do a video yesterday, but look at that. We just sort of ventured a little higher than 105.5. For me, target hit, very happy. I called this move, very happy. And again, I think it will continue along with yields. But this development today is very exciting. And it may have just interrupted things just for a few days, I think. So let's see what happens. I certainly don't expect the dollar to go all the way back down below 104, that's for sure. I think it will hold this, go sideways and go up. Let's look at commodities. Basically down. We'll start with copper. So hard to call copper. I mean, look at that. It's slightly green today. Explain that. Makes no sense. So I mean, at least we have the trend lines in place. This trend line here, it's resistance and support. At this point, it's acted as support. You can see yesterday it was support. And then this descending line. So now we don't need to really guess much more. I would find it very hard to predict copper, but I think this now has it sort of held in place. So, I wouldn't sort of predict it to breach or drop below this until it actually happens. Let's just see what happens. But just pure sideways today, which is a little surprising. Normally, I'd expect it to be down on day like today because commodities were down, markets were down. But okay, it decided to go sideways. Yeah, it's very hard to call copper at the moment. Natural gas down. Okay, interesting. I still think it's well, I've already bought this range. I basically bought around, let's say 2.65, but I actually bought NGAS at 0.011, in case you're wondering. So for me, this entire range is bought. I won't buy it back. I won't buy more until it drops really towards its old low, but I'll be buying just above its old low because I think it's just a buy on its own supply demand dynamics. You zoom out, especially if you're buying an ETF like I've managed to do. There's no fear of a company going bankrupt and going to zero. It's just pure ETF trade, and I can hold it for months if I have to. And I'm absolutely positive it's going to go all the way back up to 5, maybe even 9. So, but anyway, down it went today. I think today was a bit of a special day and everything was down, so no problem with that. And look at oil. Oil also just after looking really strong here at the 80, retraced essentially with the markets, with the dollar going up, rates going up, and the market going down, except for today, of course. But the last 2-3 days, rates and the dollar just screamed up. So you can understand that oil going down. And then today, today was special. Everything goes down. So down we go towards this ascending line. So let's see what happens tomorrow. Normally it would find some support and go back up. But, if we have a real panic day tomorrow, we go right back down to 73. So just an absolute roller coaster non-stop over here. It's kind of amazing. I mean, you've got your trading ranges too. So you could just buy the low 70s and sell the high 70s. Anyway, that's oil. Gold and silver, I find this quite interesting too. So obviously we had a smash the other days. back down to just above 1800. That was nice. We've identified that as support. We've held support. Now today, gold was up. Again, the days we set here, but gold was up essentially 1% today, or just a little less than 1%. Yeah, which is pretty impressive. Okay, the dollar was down, yields were down, so normally that helps gold, but I don't think that's why gold was up. Gold was up because of fear. And the way I'm sure of that is because silver was not up. So, okay, silver is at support and it didn't go red like everything else, so it's still relatively strong compared to other commodities. But if gold is up 1%, you'd expect silver to be up 3%, something like that. A bit like the other day, gold was down 1.5% and silver was down almost 5%. That's the kind of difference between those two assets that you would see percentage wise. So, was gold up 4%? No, it wasn't. It was flat. So that means people are buying gold out of fear. They're not buying the metals as a sort of commodity, even monetary related trade. So, and I was going to say the miners were also red, which also proves that point further, but I didn't want to jump to the miners just yet. I just want to reemphasize the point that silver is at support. Now, because of what's happening, you can have moves overextended. You could have flushes, over dramatized. So you could have silver flush 20, close below this ascending. It could happen, even though silver is basically by where it is, as you can see. But don't deny the possibility that we could just have this black swan continuation tomorrow, and the fear just spreads. And you've seen it. People dump assets that they shouldn't dump. Everything goes down, and it's just sort of the dollar, VIX, and bonds up. You could have that sort of combination. So, cash is king kind of thing, even if the dollar is slightly down on the day. But if things get really panicky, I'd expect the dollar to be up, by the way. That I'll say too. And I'm talking about, by panic, I'm talking about the market's down 4%, the S&P down 5.5%, one of those days. I don't think it's going to happen tomorrow, but when you see that kind of a day, trust me, the dollar's up. But okay, otherwise silver is at support. So yeah, it's generally a buy, but still it depends. It depends on your time horizon. And remember how bullish everything was up here, and now people are bearish down here. It's just amazing how the markets, especially the psychology around it, works. Let's look at the GDX and GDXJ. Look at that. Closed basically like the markets. Now, we weren't down like the markets, so relative to the markets, the miners are strong because of the metals also. But look, we're down. Gold's up 1% and the GDX and GDXJ are down. That doesn't make sense, but it does if you understand that it was a market rout. So everything related to the markets goes down. Gold went up. Because gold went up, silver wasn't red, it was unchanged. And therefore the miners weren't as down as they otherwise would have been. But what does this mean? This means that if the market keeps going down, and it will, in my opinion, then the miners will go down. So that means you can get the miners not just here at this ascending support. We can remove these targets. We're not going to get there anytime soon. But you could go even lower. So look at something like that. Obviously, this target should be here now. So, if the market route continues, I expect the miners to outperform on the way down. So if you have the S&P down 2%, you'll have the GDX down 0.75%, but still down. So you can get them cheaper. And again, you could have days where gold is slightly up, but the miners are down, like today. Which means it's a good buy for when the markets go up. These things will be going up more than the general markets, general equities. And just generally speaking, the miners are the best buy, in my opinion, when the market really rebounds, but you can get them cheaper. It's worth being greedy. I have a core position, but I've been selling on the way up and buying on the way down. And I've been selling the small pops because I think they're going lower. And, for me, this is working out very, very well. I would love it if it keeps going down. Absolutely love it. And I think it will happen, especially with what we've seen today. GDXJ, exactly the same pattern, except they already took out its ascending support. In fact, this one I can delete. It's totally irrelevant at this point. So, Let me just move this down. That's more accurate. Yeah, this is the next support zone. Could easily get there. Let's just see how much of a percentage move it is. Yeah, that's asking a lot because they've been quite strong. It wants to bounce from here, but if the market's getting flushed, it's not going to do it, even if gold is up. So anyway, that's the miners. Let's move straight to Bitcoin, which is still moving after hours here. Of course, it never ends. Beautiful. Look at this annotation. I'm going to delete it because it's done. You know, here sideways, we would lose ascending. We lost it. I thought we would bounce a little, probably a bit more than what I wrote here. But because of what happened today, boom, down we go. Now, what do we expect from Bitcoin? Now this chart looks horrible, you know? Yeah, we could bounce. We could maybe go, for example, depends where it closes today by end of day, but if the market bounces, I don't think it will, you know, you could have Bitcoin retest here. That would make total sense. That's normal behavior, you know, bounce from its current support, and it's kind of at support, even though it's, you know, it's ventured below it. Bounce, test this resistance. Resistance will hold, trust me. Back down to support and then flush. Or, but look, you know, this type of drawing, just to make it easy, what I mean, this suggests it would last weeks. That's not what happens these days. And again, I'm sort of doing that just to make it obvious. What really tends to happen is it lasts like half a day. It's just sort of, oh, okay, this is horrible. Looks like a deformed shark fin, but you know, it looks like we're going to go down again. Small bounce down, and then what? Then Bitcoin's done this tremendous move up for nothing. And you know, look at the Nasdaq. The Nasdaq is the strongest market so far. But that's besides the point. All of those markets, the S&P, the Nasdaq, the Dow, the Russell, they have quite a bit down to go before they hit their lows. And I would say, you know, Bitcoin, how much move down is this? 15, 20%. I mean, that can be done. Look what we got today. We got 6% today. You know, this can be done in 1 week. So I really do think that it'll try to rally, it'll fail, the markets will go down. Bitcoin will start to really have shaky feet and just come all the way back down here. And people are going to think, my God, how do we rally from here? And the chart won't look good by then. It will sort of, you know, there's only one more level. Once we're at 18,500 or whatever you want to call it, there's only one more level after that. And that's really the low, the all-time low. I don't think we would flush this 18,000 and then just bounce from, okay, we could bounce a little bit 16,000, but it's just the bottom of the range. So Bitcoin is very, very close to looking horrible and destined for new lows, especially with this, you know, reverse head and, well, this head and shoulders, but a very deformed right shoulder. So Bitcoin not looking good, moving exactly as I expected, down with the markets. It's very speculative. A lot of people thought the low was in here, me included at one point. But when I saw it fail this 25,000 and hit this, that's when I started to say, wait a minute, the market's going to go down. Bitcoin's kind of failed this. If it goes down with the markets, it's going to go all the way back down, and that's what's happening. So that's why I think I'm going to finish with the banks because sometimes I do just because of Credit Suisse, but honestly, today was bank driven. So first of all, the XLF, the main ETF to go with the bank stocks. Let's take a look. Very nice. Doesn't give the full picture. Where's my little friend SIVB? This is the one that started the whole chaos. And there's 3 or 4 banks actually that really got caught up in this. I think what's it called? Silvergate or something. The crypto related bank. I haven't seen that one yet either. Over here, look at that, minus 42% today. My God, the crypto stocks got annihilated. That's, by the way, another point. If you start, I'll go back to the banks in a second, but if you look at the crypto stocks, they're actually underperforming crypto itself. So you look at Mara, look at that, close at low of day, at support, destined to go lower. Riot, these are the main crypto stocks. I own Hive, by the way, but I've trimmed my position. I love that coming down. Bitfarm, seriously, already halfway down to its lows. Hut 8, exactly the same thing. And then obviously Silvergate Capital just going into bankruptcy, new lows every day. Look at that. You can't even see it on the chart, but that's minus 50% just today, minus 42%. Then you got the more known micro strategies. Look at that. Totally lost support, by the way. That's going all the way back down to 150/135. And then what happens? Imagine Michael Saylor gets a margin call. There are so many black swans out there. All of these little dodgy, speculative, high risk, margined up, just loads of debt. It's all going to happen. It's interest rates. Coinbase. Yeah, I mean, who wants to hold this stuff? Anyway, back to again, that's crypto. That's why I think crypto is going lower. Back to the banks, because the banks have been pretty resilient. During this whole bear market, they've been doing very well. Unlike 2008, people think, oh, the banks are fine, it's different, they're well capitalized this time. Yeah, no. Because what about the amount of debt they hold? What about all of these derivatives that they hold? I mean, there's just the derivatives are just a crazy world, quadrillions of derivatives. It's like unfathomable numbers. Someone once, what was that? Like 1 trillion seconds equals something, I don't know, thousands of years in the past. And then we've got just thousands of trillions of debt. It's ridiculous. Okay, the banks. Banks like JP Morgan. JP Morgan are really like the backbone of the banks. When you see JP Morgan down over 5% like today, that's noticeable stuff. And look how strong JP Morgan has been over the years. I didn't even know that I had this trend line in, but very strong stuff. Just even whilst everything's going down, look at it. It's like looking like it's going to go back and test its old highs. Very strong. But just this day, what a difference a day makes. What if you do have like basically a banking collapse start? I mean, these things will go all the way back down here very quickly to 100. That's JP Morgan. You have other banks that are not as good. Look at Citi. Let me zoom out. Look at Citi. Never really made it out, ever since this 2008 collapse. Just sideways, weak sideways movement. Look at this. It takes 1 or 2 weeks to go here, and then you close below this, and bam, you're all the way back down. And that's Citi, one of the big six. Let's look at our SIVB. Look at this. Now I'm on the weekly chart. Look at that. Remember Bear Stearns and Lehman's? That's what it looked like. And then it went to zero. Whilst all the mainstream media were always saying everything's fine. Bank of America. Look at this critical support here. It's a good thing I actually drew these in. Once you have a close below this, which could happen tomorrow, by the way, straight back down again. And these are the well-known big boys, I'm talking about it's the regional small banks that are the ones that at risk at the moment. They're the first to go. Then it's the big boys. So contagion will spread quickly. Deutsche Bank. This one's going bankrupt. I reckon Deutsche is going bankrupt. And with the bankruptcy, the whole EU probably goes. But let's look at Credit Suisse, my little favorite contender for moron of the year. Look at this. Down 4.5%. New low, right? I know we actually ventured lower at some point on this 2nd of March, but we closed up here. Now we close down here. And, like I said, once you close below 3, it's done. I'll leave this I'll take it away. You know where I think it's going. Down to 0. Let's look at the weekly. And then every day I read something, some new guy just pulling their money out of Credit Suisse. Credit Suisse goes to 0. I don't know. It doesn't matter which bank starts off with a sort of a real bank run, but yeah, I don't know. I think I'm going to end it there. A bit exciting today. I'm exhausted, but there are so many black swans. I think that's the key. Watch out for the black swans. What about the geopolitics? There's just so many black swans. Cash is king. You can buy what you want cheaper. Don't go all in. Just trade your positions. Go in 10% little cuts. Give yourself some space between your buys and your sells. If something goes up crazy, sell something. Sell the levels. Learn your technicals. And have a long-term thesis, trade around that. And if the thesis changes, change along with your thesis. I'm trading the miners. I'm in it for the long run with commodities, commodity-related equities. But you know, I'm willing to buy, I'm willing to sell, depending on the technicals on a day-to-day basis, even on an hour-to-hour basis. So anyway, I'll leave it there. Sorry for the length. I hope that was useful. Looking forward to tomorrow.